This is the Asia Trade. I'm Haidi Stroud-Watts alongside Paul Allen here in Sydney. It is a cautious open ahead for Asia as traders pivot from Nvidia's strong outlook to a legal battle over the Trump tariffs and weaker US economic data.
A US appeals court giving the president's trade agenda a temporary reprieve, blocking an earlier ruling that most of his tariffs were illegal.
The Fed also in focus as Powell visits the White House, defending his data-driven approach as Trump ramps up pressure for immediate rate cuts.
And I'm Haslinda Amin in Singapore as the annual Shangri-La Summit gets underway, tackling regional and global security challenges. We'll speak live with New Zealand's Defence Minister, Judith Collins, this hour.
We're headed into that final Friday fray for the week. Setting up for the Friday session, this is a picture. We are getting a little bit of caution. Of course, that sort of reaction to the hold when it comes to the illegality of the tariffs that were decided by the US International Trade Court was met with quite a muted response on Wall Street. But it really just underscores the degree of uncertainty when it comes to the trade situation, right? But take a look at the setup as we get into Friday here in Asia. Ahead of that start to trading to the cash session in Sydney, we're seeing a little bit of downside there, about 0.25%. Chicago and Nikkei futures also looking pretty muted at this point. We're seeing that soft start as the US rally also continues to sort of fade as well. A50 China futures down by about 0.3%. Still watching that sort of dynamic as to what it means for, you know, the olive branches that have been extended on trade tariffs between Beijing and Washington, given all of the sort of kerfuffle over visa restrictions and international students. We're also watching dollar China at the moment, not doing much offshore, certainly at the moment. We do also have some data crossing when it comes to South Korea. The April industrial output on a month-on-month basis falling almost 1%. On a year-on-year basis, though, seeing a bit of a gain. And this comes after, of course, the Bank of Korea, as expected, cutting rates, Paul, in yesterday's decision and expectations of more support to come. And just 4 days now until that presidential election for South Korea, too.
Well, let's take a look at our US futures tracking at the moment. We did see some not a lot of action on US markets today. We've got futures tracking a little bit lower as well, really taking that trade uncertainty in their stride at the moment. Our markets, if we take a look at bond futures as well, they're kind of flat also. There was a very solid $44 billion auction of 7-year notes. Some interesting remarks, though, from Goldman's John Waldron saying bond traders don't really care about the tariff uncertainty. They're a bit more worried about the mounting US debt situation. Crude prices continuing to soften ahead of the OPEC Plus meeting on Saturday. We are, of course, anticipating a production increase. Just don't know quite by how much at the moment. The IEA, meanwhile, saying that crude demand remaining very, very weak. And Haidi, we also had a very interesting meeting over the past 24 hours. Powell meeting President Trump for the first time since the inauguration, for the first time since 2019, in fact. And the president's had some fairly choice words for the Fed chair since then. But really, the message from Powell was unchanged. We're apolitical. We're going to act in the best interests of the economy. But at the same time, the Trump message to Powell was also unchanged. Let's take a listen.
We saw, the president and I both saw the statement that the Fed put out after the meeting. That statement is correct. However, the president did say that he believes the Fed chair is making a mistake by not lowering interest rates, which is putting us at an economic disadvantage to China and other countries.
Yeah, really standing firm when it comes to the messaging from Powell that they remain data dependent. We did also interestingly hear from the Fed's Goolsbys, they really seeing lower interest rates if the tariffs fade away. That's a big if, though, right? Given that there's no certainty when it comes to this court decision at the moment. The appeal has sort of halted any further action for now whilst they make their considerations. But Austin Goolsby, Chicago Fed president, of course, saying that a resolution to the trade issue could push the US economy back towards its pre-tariff trajectory, which of course then naturally you would assume would allow officials at the Fed to be able to lower rates. There's a lot of ifs and, you know, what happens to get to that scenario, not least of which of course is also the question of, well, even if we get back to that pre-tariff trajectory, how much of a dent has you know, household and business confidence taken in terms of the willingness to invest?
Yeah, that's right. I mean, uncertainty remains the key theme here. And in terms of monetary policy, not a lot of movement there at all from Powell. A lot of other people were in that room as well. Scott Bessent, Howard Lutnick, J.D. Vance. It would have been a very interesting meeting.
Yeah. Let's bring in, for some more analysis, our Bloomberg News editor John Haidi, who's in Washington for what comes next for Trump's tariffs. And John, that's a big question, right? So, you know, in a sense, the decision to sort of put a hold on by the appeals court was not unexpected. What are we watching from here?
This gives the White House another day to fight again, or days to fight again. The stay lasts until June 9th. It could be extended, or another one could be put in place. But it was a stunning ruling last night by the International Trade Court and the Court of Appeals for the Federal Circuit, which paused the ruling or held up the ruling for the ruling to take effect. It puts as the uncertainty we have here of among trading partners, consumers, and investors over what's going to happen as far as trade policy, as far as tariffs go. In any case, this along with much else of the Trump agenda will no doubt wind up before the U.S. Supreme Court. In the meantime, it's something like a tennis volley of decisions being made, initiatives, and then a court ruling says no, and so everyone else is sort of left in a bit of suspension.
The term activist judges keeps coming up as well, and Scott Bessent's certainly not happy with the judiciary getting involved in this either in some of his recent remarks. But are there some risks here going forward? We've already seen an assault on Fed independence. Is this assault on judicial independence going to continue?
It has been suggested that the administration might defy a court or the courts over one of these issues that have come before, or one of these many issues that have come before the judiciary. That, however, would most likely touch off a constitutional crisis, which which the White House does not seem eager to. That seems like a step too far, at least at this point. Now, Peter Navarro and others who are responsible for trade policy in the Trump administration have said that the tariffs will remain in place no matter what, and they may well pursue other avenues, including Section 232 of the Trade Expansion Act. But and that has been used for other tariffs that have been that are still in place or are not affected by this ruling. But they are difficult to enact and will take months. The administration has a limited amount of time here, because even as this debate goes on, these legal challenges go forward, Congress is looking at the clock, and it's ticking ever closer to the midterm elections, which lawmakers are no doubt very concerned about.
We're also hearing from Howard Lutnick speaking in a TV interview at the moment, saying other countries want to make a deal with the US, so continuing to sort of drive this narrative. It does make you wonder the domestic policy uncertainty and the legal uncertainty, even if President Trump is fully expected to find other avenues of pushing through his tariff agenda, whether this impacts the amount of leverage the US has in these trade negotiations, right? Are there conversations being had, I suppose, about what the implications are for Beijing, for Europe, for example, for really any of these countries on the other side of these trade deal talks?
Well, again, earlier this week, there was some relief over the European tariffs that Trump had threatened. President Trump had threatened of 50%. That's been held off. There are other deadlines approaching, and those could be extended. But there are these clouds of uncertainty over the economy of the United States and of other countries. So as these deals or these negotiations move along, there really has to be some sort of resolution for markets and others to have a sense of how things are going to play out.
All right, Bloomberg News editor John Haidi there in DC. Well, let's get a preview of how markets might react to this in the morning trade in Asia, with Trump's tariff agenda remaining in effect. Bloomberg's executive editor for Asia markets, Paul Dobson, joins us now. Paul, if we can put this in psychological terms, perhaps, the market's entering that stage of acceptance, oh well, on trade.
And you heard it from John Haidi just now. It's like watching a tennis match at the moment, isn't it? With the tariffs on, tariffs off, reprievals and then new reductions or hikes or whatever else it might be. It's very hard for traders and investors to really get a handle on where we are right now and really to set too much store by any of these announcements as a result. And I think we saw that a little bit yesterday, although we did have stock markets rallying after we got the initial ruling that the tariffs needed to go on hold. The market was sort of a little bit cautious even then and getting too excited about it. And yes, we had gains for equities through the day, but the dollar, for example, which started off stronger, had given that up by the end of the session. And likewise, bonds ended the day firmer rather than lower. Now, we had other things playing into that, of course. On the equity side, we had the Nvidia earnings, which were taken as a positive by the market. We had some pretty lousy-looking US data, particularly concerning maybe the jobless claims, which gave bonds that little bit of a boost, made people a little bit more confident that the Fed would resume cutting at some point. And so that sets us up, I think, in Asia's morning for perhaps, a little bit of a setback in the equities market, but at least currencies can take a little bit of comfort from those declines in the dollar that we saw. And, off we go again. Who knows where the headlines will take us today?
Are there just increasing concerns when it comes to the longer end of the bond market, though?
I think that is definitely something that people are paying a lot of attention to. We've had a little bit less volatility there in recent sessions after we saw, those really big moves whipped up, in particular by what was happening in Japan. That seems to have stabilized for now, but there were interesting comments overnight, for example, from JPMorgan's Bob McKayley saying, we're not going to stand in the way of this. Other people can take that on if they want, but at the moment we're still a little bit worried that the concern over the US tax bill, the US deficits, is still going to push those long-term yields higher and get potentially to what, is a danger zone where it starts to cause so much concern that it needs some kind of adjustments maybe in issuance policy from the government, or measures by the Fed to stabilize markets as well. So he's basically saying it does look troubling and I don't really want to go there at the moment. And maybe that's a sentiment that the market is still reflecting more broadly as well. So something to keep an eye on, those 30-year yields, both in Asia's markets and, of course, in the US as well.
Yeah, Adriana Kugler of the Fed's also been sharing her thoughts on the desirability of some US assets. Could even her making these observations affect the desirability of US assets?
I think that, everything that calls it into doubt at the moment is another sort of chip in that overall kind of confidence in US markets. Now, we had the Moody's downgrade just a couple of weeks ago, remember, and that was really sort of like a little bit of a shake, a little bit of a wake up for people worrying about that. The most recent thing we have now is these the sort of reports that have been highlighting this clause in the US tax bill that would put a tax on foreign ownership of US assets where they're coming from nations that don't have, tax regimes that are favorable for the US. And I think that that's worrying as well because, you already have overseas investors that are very heavily invested in general in US assets, in US equities, in US treasuries. You have concerns over the administration, over the rule of law. You have concerns over the budget. And you also kind of have concerns on a sort of more theoretical level, but also just on a valuation level. If you add onto that some kind of a tax, then probably foreigners are going to be given another couple of reasons to think, well, maybe we want to put a little bit more of our money into assets all around the rest of the world, where, by the way, everything is looking a little bit more appealing right now, European markets, for example. And that adds to that kind of trend that we've already seen so far this year of a bit of a repatriation or a realignment of flows out of the US, a rebalancing into other markets. And that's been weighing on the dollar, as we've seen already. It could continue to go, the more that people start to question that sort of appeal of US assets, which have been that not just a haven in times of turmoil, but also a real boon in times of expansion, particularly the Magnificent Seven over recent years.
Bloomberg's Executive Editor for Asia Markets, Paul Dobson there. Well, the Sohn Hong Kong conference gets underway today. Top hedge fund managers are gathering to discuss fresh investment ideas. We'll be getting our coverage underway in a few minutes' time. We'll be speaking with the Oasis management CIO, Seth Fischer, plus JPMorgan joins us to talk market strategy. Blackstone will be telling us all about their private wealth opportunities in Japan. Much more ahead. This is Bloomberg.
Taiwan's Deputy Foreign Minister says he's optimistic over progress in trade talks with the US, but technical details still need to be ironed out. We spoke exclusively with Ming-Chi in Taipei on the status of negotiations and Taiwan's priorities.
The trade talk went smoothly. We are continue to have a conversation, and there are many technical details to settle. Like any trade negotiation, never been the easiest thing to do. So we are now in the process. 90 days, a little bit short, but we want to come up with some good, big and beautiful package to offer, and they will serve the dual purpose of meeting the U.S. need.
You mentioned that there are some technical issues to still be ironed out between the U.S. and Taiwan right now. Can you tell us what they are? I mean, what are sort of some of the priorities?
I think the first thing is to adjust the mutual expectation at the same level.
Yeah.
U.S. complaining about the non-trade barrier. We are working on that. We are in the negotiation to identify those areas they have a complaint, and we are thinking about how to protect our own people who are engaging in those industries. Second is to meet the needs. Third is in the context of our larger economic transformation.
Does Taiwan have any red lines in these negotiations or things?
I think there are some very important constituents. We want to protect our farmers, certainly, but we know that we have to be very reasonable about that. We also care very much about food safety. I think that is also another area to focus it on. But otherwise, we have the will to open our market to the U.S. product, especially.
Okay. Can you give us some details of
agriculture?
Agriculture?
Yeah.
Okay. Are any procurement plans in place right now?
Procurement plan, as announced, such as the LNG from Alaska. There's a big project. We are not only procure the LNG from Alaska, we are willing to, we have signed a letter of intent with the Alaska state government, not only the state government, but the firm they support to invest in the whole project, not only the buying the LNG, but also investing in the pipeline as a processing factory.
We heard from Taiwan, we heard from TSMC saying that if the U.S. were to put tariffs on chips, for example, that might derail Taiwanese companies' investment into the U.S. Can you explain the logic?
I mean, the thing is that you have a high tariff, then they probably either have a lower sale volume or they raise their cost. They reduce their cash flow. That to be invested in the United States. So we would like very much the U.S. to see this as an interconnected issue, the tariff and the investment. So the lower the tariff, the more cash flow they have to invest in the United States. We understand fully. And we also I think TSMC is willing to tap into the talent of the United States as well as some leading technologies such as quantum. I think those things that need a big capital investment in the U.S. So we are going to do that, but don't let tariff get in the way.
Are you confident that you can get a deal with the U.S. in 90 days?
We are very optimistic. I think we can put it that way. From many reactions, I'm not in the whole, face-to-face negotiation, but the knowledge that I have, the information that I have is that the whole thing has gone smoothly, and both sides continue the conversation.
Was Taiwan's Deputy Foreign Minister speaking exclusively with Bloomberg's Yvonne Mann, and subscribers can watch us live and see our past interviews on our interactive TV function that is at TV Go. You can also dive into any of the securities or the Bloomberg functions that we talk about and become part of the conversation as well by sending us instant messages. Do check it out. That is at TV Go. This is Bloomberg.
Right now, monetary policy is in what I think of as a good place. It's where it needs to be to continue to bring inflation down, and the economy's in a good place. We have declining inflation, it's gradual, but it's coming down, and we have good growth and solid labor market. Those are the things that mean we have a reasonably good economy.
San Francisco, Fed President Mary Daly there, and of course we have Jay Powell in his visit to the White House, really standing his ground when it comes to defending that data-driven approach, despite the pressures that we continue to see from the Trump administration, from the president himself in terms of wanting immediate Fed easing. This is the picture when it comes to futures trading after we saw that rally really fading in the overnight session on this ongoing tariff angst. Bonds also continuing to climb as well. So the sort of slowing economic data picture, the legal uncertainties around the trade war, and of course we did have that at least temporary tariff reprieve for President Trump, really that temporary blocking of the ruling that threatened to throw out the bulk of the tariff agenda that offers, at least for now, the White House some hope of pushing ahead with its economic agenda as it pertains to tariffs. But pretty muted picture for US futures at the moment. We're off about 0.25% at the steepest sort of declines that we see across NASDAQ 100 futures. Paul?
Well, let's take a look at the latest from the corporate front. Dell Technologies has given a profit outlook for the year that exceeded estimates. The company says AI server demand is unprecedented, with more than $12 billion in orders last quarter alone, which exceeded shipments for the entire prior fiscal year. Bloomberg's been told Hyundai is getting ready to raise prices across the board for its US vehicles to cushion the blow from President Trump's tariffs. Sources say the Korean car maker is weighing a 1% price hike for every model in its lineup as soon as next week. The move would apply to newly built vehicles and not those vehicles that are already sitting on dealership lots. We have more to come on the Asia trade. This is Bloomberg.
We are just getting some data crossing the Bloomberg when it comes to jobs numbers for Japan. We're seeing that jobless rate for April staying unchanged at 2.5%. There, the job to applicant ratio also at 1.26%. And I should say that is also being in line with expectations and unchanged. And of course, this poll comes as we're increasingly watching sort of the next moves from the Bank of Japan, given expectations that CPI will continue to stay sort of on the hotter side. But Governor Ueda recently has indicated they're still eyeing more rate hikes. There's been a bit of a boost to the yen, but at the moment we are seeing that's the sort of state of trading when it comes to dollar yen, given the moves in the US dollar overnight. Yeah, and in terms of CPI, we're getting Tokyo CPI for the month of May. The headline number in line with expectations, 3.4%. Take away fresh food, that ticks up a little bit more than expected to 3.6%. The market was expecting a 3.5%
increase. Take away fresh food and energy. That was also a little bit hotter than expected at 3.3%. But this can be seen as something of a leading indicator for national CPI, which came in a bit hotter than expected for April. There's a couple of Tokyo-specific factors here as well, among them the high school subsidies, which were particular only to Tokyo. That was creating some partial distortion, but that effect is now fading. Next Bank of Japan meeting, that's going to conclude on June the 17th. We're not expecting any change there, and certainly this Tokyo CPI data might reinforce that idea. Let's take a look at how futures are tracking. Meanwhile, ahead of the open, just under 30 minutes away here, Nikkei futures off by about 1.3%. We have seen the yen a little bit stronger, as Haidi mentioned a moment ago. Here in Sydney, we are expecting to open a little bit softer. Futures for the S&P also a little bit softer as well, Haidi.
Well, the annual Sohn Investment Leaders Conference kicks off today in Hong Kong, where hedge fund managers, of course, are presenting their ideas as financial markets face increasing volatility, global growth, supply chains under threat, geopolitical tensions escalating. Let's cross over to Hong Kong, where Bloomberg's Annabelle Jewellers is with our first guest, who'll be speaking at the event. And Belle, you outlined sort of all of the challenges, but of course, therein lies the opportunities.
Yeah, well, that's it. I mean, it's certainly quite a laundry list there. But joining us this morning is Seth Fischer, founder and CIO at Oasis Management. And I think we can kick off with that. I mean, it's certainly an environment where it's just layer upon layer of uncertainty and complexity. But does that make your job easier, or is it more challenging?
Makes my job every day very interesting.
OK, elaborate then. In which way?
Look, there's never a dull day. It means that companies have to deal with these additional challenges. So the old paradigms have changed. And so it means that exporting companies need to realize and think about what this means for them. Importing companies need to think about what this means for them as well, in terms of actually a dollar yen helps a lot of them. It means that the domestic economy changes. We have like two orders of magnitude. You have directly exporting companies, and you have companies that are affected because they sell to exporting companies. And so you got to think about what their effects on them are. And a lot of companies take a long time to figure that out. So you can't even ask the CFO, and like, what does this mean for you? They haven't figured it out themselves. You have to do a lot of the work and figure it out on your own.
So I think about two companies you're working with right now. There's Tariff, for instance. It's a chemicals company. There's Kyocera, that's more in the ceramics and electronics manufacturing side. Are you working with them both on sort of like trade policies and how they would be interacting or engaging with those?
These are actually much more domestically oriented companies. So yes, they actually, some of them have some exporting businesses, and there are effects on them. For both of them, corporate governance is a much more important lever for them, and there's much more upside from kind of fixing their corporate governance, helping them focus on their profitable businesses and get rid of their money-losing businesses, and that has a lot more upside than the 10 or 20% kind of tariff impact on them.
Seth, I wanted to ask about some of the opportunities in Japan, and let me start off with 7-Eleven because, of course, the drama continues to unfold. Are you optimistic that this new leadership, that has been given some grace by shareholders, will be able to achieve their targets and their goals, or do you think it's still important to keep the Couche-Tard bid alive?
I think Couche-Tard remain extraordinarily interested in the company. I think that 7-I have a couple of possibilities. They could either add value on their own, or they should really be fully open to Couche-Tard and fully open to a bid.
When it comes to other opportunities within Japan, but also some of the other geographies, what are you sort of most constructive on at the moment?
We're spending a lot of time across the region. Yes, we're extraordinarily involved and engaged in Japanese companies. We remain interested, and I spent a lot of time in the last year in Korea. There are changes, albeit they're slow. There's a carrot and a stick approach that the government's taken. So we spend a lot of time in South Korea, for that matter. Remain engaged in kind of the reopening of a window for a number of Chinese companies to raise capital. So we're re-engaged there, and we're engaged in kind of the rest of Southeast Asia also.
Yeah, I think we talked to you about South Korea and making that comparison to progress being made in Japan every time we speak to you. But can you give us an idea of how you feel about that progress, whether it's accelerating, whether you think that the presidential election and some of the political developments might, help or hinder this process?
Well, optimistic that the change in the presidential election will bring even more substantial changes to South Korea. There's a long way to go. Maybe they kind of started with a lot of FOMO, kind of seeing what Japan's done and want to achieve that. The phenomenons are different. The chaebols have to kind of realize this and make some significant changes There's a lot more inheritance issues. I think you've seen some of that, and Samsung kind of splitting off its biological businesses. And so there are some kind of EMART as well. There are some significant changes. Regulators have been much more favorable to minority shareholders very, very, very recently. But remember, we've come a long way in Japan. Right? Japan has like 13 years of progress going on here. It depends on whether it's 12 or 13 years, depending on your count. So Korea is just the very start of this. We're very optimistic. South Korea could go very, very fast. But yes, they're dealing with different challenges.
Yeah, I think actually in Japan in May there were 30 activist campaigns that were started. So the market is just, I mean, I guess that's why you're going back and forth.
Yes, I mean, Japan is kind of, exploded, and it's going to, since our first public campaign in 2017 in Pana Home, when it was untold to do this at all, and it had been a decade since anything did anything publicly, and we had spoken to a lot of people privately, and can we do this, and is it appropriate? And they're like, yeah, this is what Abenomics is really about. Kind of engage with companies. We always engage with companies privately. And if they work with us, fantastic. We won't mention them to anybody. But if they won't, then we'll be increasingly public. So we launched our first public website in 2017. And now their public engagement is almost every other week in Japan. So there's a big explosion in it. And to some degree, some other investors that, I don't know, we're never going to be in public, are out there publicly now, very often. And look, it's not just us. There's foreign domestic companies that are engaging with hostile bids. There's domestic companies engaging with hostile bids and companies. So it's completely opened up.
We're going into the AGM season as well in Japan. That kicks off in June, so a few days.
Last week in June.
Yeah. So what's the expectation then? What's going to be your focus areas for those meetings?
We're going to be at a lot of AGMs, as we always are. It's a crazy week for us, and there's still some there'll be over north of 80% of companies in Japan have their AGMs in basically 1 week. We have a lot of questions for companies. That's the one best time to kind of ask companies, engage with other shareholders, and ask the chairman and meet the chairman and the CEO, and ask them publicly and on the record a number of questions that sometimes you don't get to ask. So we have a lot of questions about why they remain in kind of money-losing businesses, as discussed, why they have remaining related party transactions, what are they doing with those related party transactions. We're asking the minority directors, the independent directors, I should say, who should represent all shareholders in the company, what are they doing of inspecting these related party transactions and kind of seeing if they're really truly appropriate, and asking also for parent-child relationships, what's going on with those directors, and are they really taking on the responsibility of looking at what's best for the underlying company and not best for the parent.
Last year at the Sohn conference, your pick was the pharmaceutical company Kobayashi, which is another company that you're very actively engaged with to the extent that it's reached a lawsuit now. But aside from those details, what's the amount of value that you think can be unlocked, and what's the time horizon that you have for that?
Look, Kobayashi is still a work in progress. We think there's an enormous amount of upside to the company. That's 50% plus. We think there's enormous amount of upside to them running a better business. There's still remaining to be, the family now is voting against management. So effectively, the management's on our side, but the family's holding them back. The Kobayashi family. There's been an incredibly large scandal there, an enormous amount of deaths that are associated with Benikoji, kind of the product that is, effectively now reportedly killed over 405 people. So it's a very serious issue. We would like the family to stand down and listen to minority shareholders and listen to the family's attempts at improving governance. If you can improve the governance, I think the company could, perform very well.
All right, Seth, thanks very much for your time this morning. That was Seth Fischer there, the CIO at Oasis Management, as the Sohn conference as well, Haidi, gets underway in Hong Kong this morning.
Annabelle Jewellers there in Hong Kong. We will have more lined up for you from the event, the Zone Hong Kong conference. Convex Strategies and Palace of Capital will be joining us a little bit later on at those times on your screen. More ahead here on the Asia Trade, though. This is Bloomberg.
The annual Shangri-La Dialogue begins in Singapore today. The Defence Forum will host more than 550 delegates from 40 nations discussing critical security challenges in the Asia-Pacific and beyond. So let's get over to the event where Insight anchor has Linda Amin standing by with our next guest.
Well, Paul, this forum is happening at a time when the world order is getting upended by U.S. policies. We see that in Ukraine. We see that in Europe, where the bloc is now forced to take care and take responsibility for its own defenses. In fact, Germany is now mulling converting a Volkswagen factory to manufacture its weapons. And also, it's happening at a time when China is seen as expanding its influence in this part of the world, in Indo-Pacific, including in the Pacific. Let's get insights, perspective. Judith Collins is New Zealand's Defence Minister. Minister, good to have you with us.
Thank you very much.
How are you assessing the geopolitical landscape at the moment? We're seeing potential flashpoints all around the world. We talk about the Middle East, we talk about even Asia and South China Sea, even in the Korean Peninsula.
Right. It feels like the world is in flux. So we've had, in essence, around a 30-odd year peace dividend, we could say, where most people understood there was basically a world order that people could understand, the rules-based order. They could understand that boundaries and borders meant something, and that there would generally be agreement that that's the way they would be. But now we're seeing a time of quite a lot of change, and whether it's the China-US relationship or whether it's what's happening in Europe, what's happening in the Middle East, it feels like there's quite a few flashpoints around the world all at once rather than just one. So for countries like New Zealand and other small nations, this is a time where we're trying to do our very best to increase our own defence spending and to do more for ourselves along with other like-minded partners. But it's also a time where we're feeling, well, we just have to do more for ourselves these days.
That's right. And we're hearing more and more countries talk about strategic independence. Can that be the way forward? I mean, in a region like the Indo-Pacific, shouldn't there be a stronger alliance?
Well, we have some pretty good, strong alliances now. So we're aligned with Australia, have been for well over 75 years, very close relationship, a lot of interoperability. In fact, I met up with one of our crew for one of our ships yesterday, and there were a couple of Australians on board, seconded in, and that's the sort of thing we do all the time. We also have very good relationships with, say, Singapore and Malaysia, with the Philippines now, that's increasing, Japan, Republic of Korea. Is close relationships with India coming. So there's a lot of those sorts of relationships. And should I also point out too that the UK, US, Canada and France are very close relationships as well.
Let's talk about that.
Yes.
US reliability in particular. We know that New Zealand is part of the Five Eye arrangement. I mean, can you trust that arrangement when the US seems to be thawing its relations with Russia? You got to wonder if you can continue to share intelligence in such an environment.
Well, I have no doubt at all that the relationship, the Five Eyes relationship, is very trustworthy, and that we can absolutely work with the US and trust their information and what we provide them, just as they do with us. It's a very long-standing relationship from just after World War II. But also, for a small nation like New Zealand to not be part of that would be, I think, a real tragedy for us. And it's one of the ways that we deal with the cyber attacks that we're constantly receiving, but it's also about understanding and trying to know where New Zealanders are in the world, how safe we can keep them, but also the Pacific region itself, very important relationship, and I haven't seen any issues with that at all.
We talk about how the new world order or the global order has been upended by the US. The US is pushing back in defending democracies around the world, and some say that paves the way for China to play a bigger role in this part of the world. That has been China's narrative anyway. Are you seeing any evidence of that?
Well, we're seeing a certainly more robust position from China in the Indo-Pacific region. We've seen it around the Cook Islands. We're seeing it around the South China Sea, the Taiwan Straits, all of that. And what I would say is that the role in the Pacific for larger nations should be one where we work with Pacific nations. We're a Pacific nation ourselves. We say, well, we work with each other. We help each other, but what we never do is dictate, and that is very important. So I think, China's been increasing its work in the Pacific, and we're also seeing that the US is still working out quite where they're going to be. But I think I'm hoping the message from Secretary of Defence Pete Hegseth is going to be very strongly that the United States understands it's a Pacific nation. it's a Pacific nation with a lot to lose if it's not involved. And I think that the US will stump up in the Pacific.
As you said, Pete Hegseth will be here representing the US, but we're not seeing the presence of the Chinese defense minister. How are you reading that?
Well, that's a very unusual situation. So the Chinese defense minister, Admiral Dong, has been absolutely at almost everything that we could possibly be at together. So I'm surprised by that. I'm not sure what to read in it, but I do think that there is a Chinese presence. He does have a deputy here, but it's unusual. And I think it's something many nations will be slightly surprised about.
Would you say it is a missed opportunity to have high-level discussions with the defense minister of China at a time of great uncertainty in the world?
Well, I think it's up to China. I mean, they'll decide who they send, so I don't want to read too much in it. But it is surprising. And but look, people sometimes can't attend for various reasons, and no doubt they've made a strategic decision.
Minister Collins, we know that New Zealand will be upping its defence spending to 2% in the coming years. What would be the priority for the country?
Well, the big thing is to remember that we're a maritime nation. We have the 4th largest search and rescue area in the world. We have the 9th largest exclusive economic zone, and that we need to really build our capability back. At the same time, using new technologies, particularly drones, land, sea and air, and also using our space sector, because we are 3rd in the world last year for successful, verifiable vertical launches into space. So for a small nation with the population of Alabama, we're actually doing quite well, and we're certainly back in things. So 2% is a doubling of our defence budget, and then we're also looking every 2 years to see whether or not we can increase that further. But we do realise we have to pull our weight, and we are.
How soon do you think you might have to increase your defense spending? A small nation like Singapore, a population of 5 million, is spending 3% of its GDP, and NATO member countries are now being asked to spend 5%.
Well, I think the point is that we need to be able to justify, obviously, it's a New Zealand population, and they've been incredibly supportive of our doubling of our defence spending. But also we have to have the personnel to do this. So in Singapore, there's national service, there's a ready market of people, ready cohort of people to come into the military. In New Zealand, we don't have that. But what we do have is we've inherited a major problem with attrition in the Defence Forces. So we were up to 17.7% at one stage, losing people a year. Now we're down to, across the whole board, 7.1, which is a normal set. So we've got to rebuild the personnel. If I had even double of what I've been given, I still wouldn't be able to spend it properly, because I just have equipment sitting there waiting to be used. We've got ships tied up at dock because we don't have enough personnel. So it's about increasing as we go. But yeah, we've got a big commitment, and we're looking to do more.
Minister Collins, even as the US talks about being committed to the Indo-Pacific, there has been a pullback in its commitment to the region as well. And some are questioning whether the likes of Japan or Europe could possibly fill that gap being left behind by the US. What's your...
I think Japan is obviously looking to see what it can do. It's very interested in the Pacific. It's very interested in being involved. I think also people should also remember that the Pacific, floor of the Pacific, it's a big blue ocean. There's lots of fish, but there's a lot of minerals down there. And seabed mining is really what a lot of countries are looking at. Certainly China's done a deal recently with the Cook Islands. The US has made some discussions, or certainly some companies have said that they're interested in it. There's a lot of that, and what we're saying is, remember, the Pacific is full of resources. It is therefore quite a vulnerable area, because we're mostly small nations.
Minister, always a pleasure to have you on the show.
Thank you.
Judith Collins, New Zealand Defence Minister there. Paul, we're coming to you live from the Shangri-La Dialogue, where the biggest names in defence will be discussing all the geopolitical risks around the world.
All right, thanks very much. That's Linda Amin there in Singapore. Let's get to some breaking news. More data out of Japan. We're getting retail numbers, industrial production numbers as well. Let's take a look at retail first. Coming in line with expectations, 0.5% for the month of April. So that's a rebound from the contraction that we saw the month prior. Retail sales on an annualised basis accelerating 3.3%. That said, consumer sentiment in Japan still reasonably fragile against that inflation backdrop. backdrop. We also get industrial production numbers for April. They contracted less than expected, 0.9% contraction. The survey was for a 1.4% contraction. So there was an expectation here that the tariff environment might have led some automakers to trim production. If that happened, it happened a little bit less than expected. We have more ahead on the Asia trade. This is Bloomberg. Let's take a look at some of the key currencies that we're tracking at the moment. We are seeing an environment of ongoing dollar weakness. One of the main beneficiaries of this in the past 24 hours or so has been the yen, rebounding now to 143.80. Bloomberg Markets Live coverage suggests the US dollar is going to remain a little bit soft. Treasury Secretary Scott Bessent's also been signalling his dissatisfaction with that recent trade court ruling in which the US tariffs were ruled to be illegal. An appeal has obviously been filed, so those tariffs remain in place for now. So the greenback declining against most of the peers that we track, 113.79 against the euro at the moment. Haidi.
Yeah, take a look at the setup when it comes to Australia and Japan too. And this, of course, as we saw Asian stocks set for that 8-month high, climbing the most in 2 weeks in the previous session on the back of that court order in the US against Trump's tariffs, really lifting sentiment. That, of course, has now had a temporary reprieve. We'll be waiting to see that reaction. The reaction was pretty muted in the overnight session, but we did see that steady fade, as you mentioned, of the Wall Street rally overnight. In Australia, we're seeing downside of about 0.4%. We're also watching this sort of switch in focus from the RBA as well, focusing now away a little bit from inflation to these external economic risks arising from the tariff regime and broader sort of geopolitical upheaval. Nikkei futures down by 1.7% and S&P futures at the moment to the downside too. The market opens in Sydney, Seoul and Tokyo are next. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens, and that trade uncertainty that we were talking about coming through from this court order now to just temporarily halt the ban on the concept of the illegality of the Trump tariffs, just throwing into that sort of volatility that we were expecting, right? That it's not going to be a quick solution, and you can see that uncertainty really passing through market sentiment.
Very much so, and it does feel to a great degree that we're ending the week very much as we began it, back where we were.
Despite all the excitement.
Exactly, so much excitement. And even we had Jay Powell and President Trump meeting for the first time since 2019. No surprises there either. They're both firmly dug into their respective positions on rates.
Yeah, data dependent. President Trump will continue to ask for immediate easing. So in some respect, there's no surprises there as well. But let's take a look at the start of cash trading as we get into the open in Japan. The Nikkei 225 firmly down 1.4% lower. We did have Asian stocks really hovering at about that 8-month high on these sort of optimism that the tariff woes were easing from at least a sort of a legal point of view in the US, but of course that's been put to a hold for now as well. The topic's also down by just about 1%. We're seeing dollar yen about 143 sort of level, but one thing is sort of consistent is the level of concern that continues to build around the longer end of the bond market, whether you're talking about JGBs or treasuries as well, and certainly some of the comments that we had from not just Jay Powell but also Austin Goolsbee overnight didn't really help much either. Austin Goolsbee really just saying that, if there is a resolution to the trade war situation, then we could see US economic growth resuming back to that pre-tariff path. There's a lot of caveats to that scenario, of course. Let's take a look at what we're watching when it comes to Korea. Of course, hot on the back of the Bank of Korea decision yesterday to cut 25 basis points as expected. Further easing is also expected. We're also just, 4 days out now from that presidential election. So really, this is a market that's now approaching bull market as these election hopes of sort of policy reforms, perhaps more governance reforms for Korean corporates are also driving some of the optimism. At the moment, we're seeing above that 2,700 level for the Kospi is the highest since August. That rate cut and certainly the hopes of a new presidency bringing about change is really helping there. We're just about 1% away now from that bull market, and in particular watching those brokerage stocks that have been, Paul, some of the biggest beneficiaries.
We've just opened for trade here in Australia as well, just kind of flat in the early going, which is no great surprise. There's very much to be expected. Haidi mentioned bonds there as well. We've got a fair bit of stability in that regard at the moment. We did see a solid $44 billion sale of 7-year notes out of the US. Goldman's John Waldron, though, chiming in with some comments there, saying bond traders are more worried about mounting US debt than they are about tariff uncertainty. A quick word on the oil price as well. That's giving up recent gains also. We do have an OPEC Plus meeting tomorrow. Production increases are expected, not just sure how much at this stage. The International Energy Association, meanwhile, saying crude demand remains weak in this environment of trade uncertainty. Well, let's get to our next guest. Aisa Ogoshi is APAC Equities Portfolio Manager at JPMorgan Asset Management. Aisa, thanks for joining us, and I do want to start on that question of trade uncertainty as well. We even have a chart on the Bloomberg terminal that illustrates that uncertainty is ticking up again following this are they on, are they off tariffs decision and appeal out of the US over the past 24 hours. How are you investing around this, or are you even investing around this?
Yes, good question, Paul. So I think for our team, or for the broader team, we focus on what we have control over. Obviously, estimating what the U.S. administration will do next is quite difficult. But as you pointed out, Korean markets, China markets, and even Australian markets this year has done very, very well. And a lot of it is driven by domestic growth sectors and domestically exposed sectors. So that's where we are focused on as well.
Well, let's take a look at, you mentioned Korea markets there. I mean, we've just had a rate cut from the Bank of Korea, potentially more coming. We're likely to see some fiscal spending post-election as well. What are you focusing on in Korea in terms of opportunities?
Well, the market can, after the presidential elections, refocus back on the Value Up program. What we've learned from the Japan experience is that the corporate governance reforms, the market efficiency reforms, this has a lot of legs. It's not just a one-year policy. So we're very much focused on how the Korean corporates can further improve their capital efficiency, corporate governance, that will lead to potential re-rating of the market.
You're also constructive when it comes to China at the moment. Can you tell us why? Because, of course, depending on which camp you're in, you can either be quite positive in terms of the economic recovery and, sort of made in China strategy and some of the tech advancements being made. On the other hand, it is, front and center when it comes to these tariff uncertainties.
So yes, for China, I think we need to remember that we started our year at a very low valuation point. So China has been a very difficult market. And obviously, being an exporter, the tariffs news don't help. But what we've seen post the DeepSeek moment is that China tech is well and alive. There's a lot of activity going into the Chinese tech companies. And also what we have seen so far is that the consumption, although the overall consumption is still weak, the affordable sectors, so much of these are domestic China brands, there are many of them that are actually growing quite strongly year over year. So I think once we shift the focus to more, again, domestically exposed sectors, we do see some positive signs, and that's, again, where we are focused on.
And as you point out, rightfully, consumption and household sentiment still remains quite subdued. And, there's been a lot of focus on things like milk tea, for example, or Pop Mart. Which sort of these sectors and companies do you think are compelling at the moment in that consumption space, despite the downtrend in consumption that we see?
Yes, so I mean, this might be a very consensus call, but companies like Xiaomi, for example, in all of the segments that they are exposed to, they offer affordable tech in smartphones, in home appliances, in EVs. They have the right design, the right price points, and with good technology. And their market is basically domestically China. So these are companies that we feel are interesting. They also lead in terms of certain technology areas. And again, you know, technology, internet, this is an area where China has been and is still strong at. So these are companies that we are interested in.
Yeah, we heard from the NVIDIA CEO yesterday, Jensen Huang, saying China's AI rivals are, in his words now, quite formidable. Are you looking at anything in the AI space in China?
Yes, so I wouldn't pinpoint specific companies, but I think this was a Bloomberg article a while ago that something like half of the world's top AI scientists come from undergrads from China universities. So the breadth of AI engineers, AI startups in China is actually fascinating. And I'm sure we will see some more companies coming out of it into the market. So far, I think the concentration is still in the larger players, the larger internet companies. But this is an area where we are looking forward to seeing more new companies enter the market.
Aisa, always great to have you with us. Aisa Ogoshi, APAC Equities Portfolio Manager at JPMorgan Asset Management. More to come here on the Asia Trade. This is Bloomberg.
The tariffs remain in place. The court told us, they didn't all but tell us, they told us, go do it another way. So you can assume that even if we lose, we will do it another way. And I can assure the American people that the Trump tariff agenda is alive, well, healthy, and will be implemented.
White House Trade Advisor Peter Navarro there, and more on the state of Trump's tariff agenda. Let's bring Bloomberg News Desk editor Judith. So, of course, you know, the relief rally was short-lived. We knew that there was going to be more uncertainty ahead overall. Where to from now that we've had the appeals court at least a temporary reprieve for the Trump administration?
Well, Haidi, I think this just shows you that at this point now, it's really a lot of this is going to be in the hands of the court as this works through. I think the important thing to remember about the reprieve, I mean, you know, just yesterday when the original trade court ruling came down, there was a lot of uncertainty over whether the tariffs would be allowed to be in place. As this works through the courts now, obviously that appears to be the case. Because remember, that original trade court ruling essentially said that the Trump administration had like 10 days to unwind the tariffs in some fashion. So at this point now, there's a briefing schedule that pretty much puts this reprieve in place through about June 9th. We'll see if this actually ends up before the U.S. Supreme Court. I think that's, you know, starting to become more of an expectation of a possibility here. So you've got that kind of working out. But then I think, you know, what you're hearing from Peter Navarro here is the Trump administration's insistence that there are other mechanisms that they can use to effectively, put tariffs in place if they need to. I think that's really the open question there, because a lot of the ruling on the legality here so far that they're dealing with is those emergency powers that Trump used to apply a lot of these tariffs via executive order. If that's ultimately struck down by a court, again, we don't know what's going to happen yet, but if that's ultimately struck down, then I think the mechanisms that the Trump administration has to put in place tariffs again, it gets a little bit trickier if they can't do it through executive order.
Jill, we've also recently heard from Treasury Secretary Scott Bessent remarking on the progress of China trade talks. Let's just have a listen to what he had to say.
given the magnitude of the talks, given the complexity, that this is going to require both leaders to weigh in with each other. They have a very good relationship, and I am confident that the Chinese will come to the table.
Now, in President Trump's first term, we of course saw a phase 1 trade deal and we never really got to phase 2. Realistically, how long could this take?
This is the kind of thing I think that this could take a really long time to ultimately resolve. I mean, obviously, I think some of us were a bit surprised by how much progress appeared to be made in Geneva when they came up with that temporary trade truce. But again, it's sort of a clock on that. If there's going to be anything larger in terms of, the U.S.-China trade deal, I think there's just a lot of components, obviously. There's a lot of complexities here that are really sort of difficult to parse. You've got a lot of concerns over everything from semiconductors, chips, rare earths that have really kind of entered the equation here. So it's not entirely sure how exactly they're going to play off of each other. And then I think when you're looking at, other ways in which tensions between U.S. and China have been raised, I mean, just look at, this week where you've got Marco Rubio, the U.S. Secretary of State, talking about, blocking, Chinese students from getting visas and studying in the United States, kind of ratcheting up tensions there again. I think it just really goes to show you that this is a really complex relationship. There's a lot at stake in the trade relationship. Obviously, they've got to work something out. These are the world's 2 biggest economies, but it still might be a long way to go before we see something, that kind of steadies there. So again, just really pointing to that overall theme here of uncertainty.
We've also got, of course, Jay Powell sitting down with President Trump in a private meeting for the first time in this presidency, in this term, I should say. So what did we learn? Because it certainly didn't sound like there was any meeting of the minds when it comes to how monetary policy should be set.
No, I mean, so this is a meeting that took place at the president's invitation. It doesn't, it sounds like Powell was just stressing a lot of the things about sort of following, fundamentals that he usually does. I think this is really just an interesting meeting against the backdrop, obviously, of you've got Donald Trump, who's, repeatedly pushed he really wants Jay Powell to lower interest rates. He thinks that he's moving too slow. He thinks the Fed is moving too slow. And then obviously you've got, Donald Trump, previously sort of openly musing about the possibility of removing Powell from office before his term expires. Now, apparently, it sounds like that wasn't raised in this particular meeting. You just had, Trump otherwise just expressing, some of his desires there. But I do think it's just interesting. This is the first time these two have met, I think, actually since about November 2019 during Trump's first term or so. You've got that meeting here, but it doesn't sound like, there's any major fireworks or anything like that.
All right, Bloomberg News Desk editor Jill Desis there. Well, Taiwan's deputy foreign minister says market speculation that the Taiwan dollar's recent gains were a gesture of goodwill to the US are an overstatement. Chen Ming-Chi spoke exclusively with Bloomberg about how the island's government is handling its currency in trade talks.
Currency is not part of our trade negotiation with the US. I think, we are a free trading state, so our currency inevitably have many ups and downs. So I think that is nature. And let's not forget, the whole Asian currency is now in the appreciation trend. So I think including Taiwan dollar is no exception.
Taiwan has repeatedly said that exchange rate was not talked about. But the speculation alone was enough to spark
certainly.
This
unfortunately,
surge.
that is a thing. So our central bank have to manage this expectation.
There's chatter now even that there's a narrative at least that Taiwan is allowing the currency to appreciate in terms of as a goodwill, like a gift to the U.S., without the U.S. even addressing it. What do you have to say about that?
I think that is an overstatement about how our central bank are capable of and are willing to do. I think we respect. We don't want to see a very big swing in our currency like any country in the world. I think it's only nature, but we don't intervene the market mechanism all the time. So only if there is a big swing that is in danger our own whole economy, then we'll try to adopt some policy to make some unnecessary adjustment.
What about just internally? Has the currency been a topic of discussion?
You mean inside the government?
Yeah,
No.
as you approach these trade talks. What's happening? You guys are not talking about it.
We watch it closely, but that doesn't fall into foreign ministry's obligation or duty to do that. But my understanding is that we don't really intervene, but we are concerned party, and I think our central bank, given the size, they monitor it all the time, but they try not to intervene.
If the U.S. were to bring it up, though, how would Taiwan address it? What's the approach?
The approach is that, again, we have to manage this, and we have to negotiate with the United States, our counterpart in the United States, and try not to create too much of turbulence to the market. I think that is a main goal for Taiwan.
Taiwan's Deputy Foreign Minister speaking exclusively with the China Show co-anchor Yvonne Mann. More ahead on the Asia trade. This is Bloomberg.
Let's take a look at how assets in Japan are tracking at the moment. We did have a fair bit of data out of Japan a little bit earlier. Retail sales coming in line with the expectations. Industrial production a bit better than expected. Core CPI was also in line. Core CPI was a little bit higher than expected, but the headline figure was in line. For more on some of these numbers, let's get to our economy and government reporter, Erica Yokoyama. So, Erica, not too much in that data to scare markets. What's the overall picture of the economy?
Sure. Yeah, this morning we had a couple of data, and I think overall they're presenting a range of risk factors facing Japanese economy. And one of them is, as you said, in inflation, sticky inflation. We just had a Tokyo CPI figure, then that's the leading indicator for the national trend. That was another acceleration, mostly driven by the higher prices of some food item, including rice, and also services price as well. Like sticky inflation will drag down the real wages gain and pushing down the consumer sentiment. And another thing we had was industrial production data for April. Then that saw a little bit of slowdown, the decline from a month earlier, and that's actually suggesting the weaker business sentiment after Trump's tariff fully kicked in. So I think overall, like today's data altogether are just like a reminder of a risk of Japan might enter a technical recession through the second quarter.
We're also hearing more from Governor Ueda at the moment, saying that the price outlook incorporates a tariff impact on the economy, which is quite interesting because one of the biggest challenges, obviously, for economists and central banks is sort of having to model how tariffs, whether they will happen, what they'll look like, and the implications on economic data. He's also saying he's aware that companies are continuing with proactive price setting. So the big implications are coming from trade when it comes to the next BOJ meeting, as well as the upper house election.
Yeah, I think today's data actually put another pressures on policymakers, both BOJ and Prime Minister Ishiba. And for BOJ, first of all, like today's data showed another acceleration in price hike, and that probably give the reason for BOJ to consider rate hikes sooner than later. But at the same time, the other data, including like the production data, pointed to a weaker sentiment as well as consumer and cooling sentiment as well. So that's gives a reason for BOJ to wait and hold and assess further development. BOJ has, as you said, BOJ is expecting another meeting in mid-June, but I think the BOJ won't move at this time, given the situation, as the market expect. And also for Ishiba, as you said, the upper house election approaches in about 2 months, then inflation has to be the biggest headache for him. He already rolled out some economic package, including resumption of the subsidy for utility bills, and also the government decided to release additional stockpile rice. But we don't know yet whether these measures are effective in lowering the prices and show up the support for Prime Minister Ishiba and his minority ruling party ahead of the election.
Yes, and the Prime Minister would probably like a good announcement on trade ahead of that election as well. We've got the chief negotiator heading to Washington for his 4th visit now. Are we getting closer to a deal? What's the timeline here?
Sure, it's a really good question. So Japan has been sitting on the negotiation table for about a month with the U.S., it seemed that the G7 June summit will be a window, possible time that the two nations strike a deal. But so far, it seems they're slightly tricky. But meanwhile, as you said, there are some sort of development and momentum lately. Ishiba last night apparently initiated a call with Donald Trump. That was like a second time within a week, which is quite rare, I guess, and just confirming on further collaboration in talks. And also Ari, this week we got another development in Nippon Steel and U.S. Steel deals. Trump apparently approved Nippon Steel's buyout of U.S. Steel with some sort of golden shares deal, which could be a tailwind to Japan as it can be used as a leverage that Japan can offer. And as you said, Japan's key negotiator Akazawa is already in the U.S. for forced negotiation with U.S., this time with Scott Bessent. So we should see whether these kind of developments are factored in terms of making progress before the June summit.
Bloomberg's Erica Yokoyama there. Let's get you caught up with the latest on some of the corporate headlines. And Bloomberg's been told that Hyundai is getting ready to raise prices across the board for its US vehicles to cushion the blow from President Trump's tariffs. Sources say the Korean car maker is weighing a 1% price hike for every model in its lineup as soon as next week. Toyota will start producing 2 American-made all-electric models next year, adding to the company's existing EV lineup. It wants to have a total of 7 EVs on display in its US dealerships by mid-2027. More ahead on the Asia trade, this is Bloomberg.
Let's take a look at how the major markets in Asia are tracking at the moment. A little bit of softness there for the Nikkei. It's off 1.5%. We are seeing a stronger yen as well at 143.68. It was 24 hours ago we were sitting here talking about how the tariffs appeared to be off after that US court ruling. Well, they're back on again. The appeals court saying they will remain in place while that appeal is heard. Perhaps unsurprising. Markets generally taking this in their stride. We've got the Kospi off by about 1/3 of 1%. A little bit softer here in Australia as well, Haidi.
Well, Defence Ministers, Paul and senior military figures are in Singapore for the annual Shangri-La Dialogue. Our chief international correspondent for Southeast Asia, Haslinda Amin, joins us live from there. It is an important forum at a critical time for the world economically and strategically.
Well, that's right. If you take a look at the geopolitical risks since the second Trump administration, they suddenly have risen over the last 6 months. Now, this is a U.S. that's been pushing back on defending countries' economies around the world. Case in point, we have Ukraine, also in Europe, where, countries there have been forced to take responsibility for its own defense. In fact, the likes of Germany is now talking about, converting a Volkswagen factory to produce its own weapons and weapons system. It is also a time of huge questions over the reliability of the U.S. as a strategic partner. Remember that when it came to the United Nations, we saw the U.S. for the very first time doing the unthinkable, voting with Russia as well as North Korea, something that people didn't think was possible until now. So the big question, especially in the Indo-Pacific, is whether or not the U.S. is a reliable partner. Remember that the U.S. has been a long-standing ally of the region. A lot of the countries in the region depend on the U.S., including the Philippines and the South China Sea. Now there's a huge question mark whether or not they can still rely on the U.S. So, a big focus is on the upcoming speech of U.S. Defense Secretary Pete Hegseth. We'll be reading the tea leaves on U.S. commitment in this part of the world.
Yeah, that rivalry between the US and China very much in focus at the moment. So is this for an opportunity for the militaries of both those countries to exercise a little bit of diplomacy?
Paul, you would think that, but chances are this is a missed opportunity. Here's the reason why. We talk about Pete Hegseth, expected to lead the delegation of the U.S., which is said to be the most robust in recent years, and that, they say, shows its commitment to the Indo-Pacific region. But when it comes to the Chinese, we're hearing that its defense minister will be a no-show. This would be the first time since 2019. I remember at this specific conference just last year, we had Defense Minister of China, Dong Jun, meeting with the Defense Secretary of the U.S., and they had a deep conversation to talk about, risks in Indo-Pacific as well as the rest of the world. That's not to be, and there's a huge question mark of where their bilateral relations, fragile as they are, would be going from here. This comes against a very difficult background when it comes to those relations. Remember that just yesterday, we heard that the U.S. will be revoking aggressively student visas from China as well as Hong Kong. Well, I caught up with the chairman of the U.S. Select Committee for the CCP, the Chinese Communist Party, to ask him what the end goal really is for the U.S. Take a listen.
The end goal is to have a relationship with China that acknowledges the reality that their government is moving in a very different direction than they promised. And we have to reset that relationship. If China were to change course and promote actual peace and be responsible in the world stage, then I think, that would be healthy for the whole world. But if they continue down this path, it's going to be a threat to the world. When you look at their close allies of Russia, North Korea, Iran, and the partnerships that they're forming, that is a threat to the entire free world.
Are we looking at a decoupling between the U.S. and China? We know Treasury Secretary Besson says she's not after generalized decoupling, just in areas of critical interest to the U.S.
I think it's an area where we have to be strategic with sectors and make sure that we aren't enriching the Chinese military-industrial complex that can have weapons that would be used against us. And so, regular goods that are sold between the two countries, I don't think that's a problem. But when it comes to these critical technologies, AI, advanced batteries, uses for military equipment, I think we need to be strategic and recognize we don't want to see the further buildup of a very aggressive nation.
And it is that great power rivalry that is in focus at this Shangri-La dialogue. Remember when they say that when the elephants fight, it is the grass that gets trampled. And that is the sense in this part of the world, in the Indo-Pacific in particular, caught between the U.S. and China. Haidi.
Bloomberg's Haslund Armin there in Singapore. And do stick with us with more coverage when it comes to the Shangri-La dialogue in Singapore. We'll be speaking with a stellar list of guests, including the Australian Deputy Prime Minister, the German Chief of Defence, and Philippines Secretary of National Defence. And subscribers can also turn to the terminal for more from the Shangri-La dialogue this weekend. TLIV Go is your function for the latest updates, plus commentary and analysis from our team of expert editors. More ahead here on the Asia Trade. This is Bloomberg.
Let's take a look at some of the major currencies we track. Asian currencies may well extend some of the recent gains we've seen, and we're certainly seeing that in the case of the yen today, 143.86, because of course we have this on again, off again, the back on again environment around tariffs. The appeals court deciding that those tariffs from the White House will remain in place while the legal arguments are heard, and this reverses the decision that we had from the US Trade Court yesterday. say that the tariffs were illegal. So they're back on for now. Dollar weakness continuing to be a theme. We've got the euro at 113.73 at the moment. Let's get to some other headlines that we're tracking on the private credit markets. Bloomberg has learned that Apollo is partnering with JPMorgan, Goldman Sachs and 3 other banks to trade private credits and syndicate investment-grade debt. Sources tell us the partnership will allow Apollo to originate larger loans faster and support its efforts to reach individual clients. Apollo and other fund managers see the $1.7 trillion private credit market as still in the early stage of explosive growth. Bloomberg has learned that Indian real estate and construction conglomerate Shapoorji Pallonji has secured a $3.4 billion worth of financing. This is India's biggest ever private credit deal. Sources tell us the deal involves the sale of zero-coupon rupee bonds with a 19.75% yield, and they mature in 3 years. About a dozen large investors, including Ares, Cerebus and Davidson Kempner, involved.
Well, Paul, Blackstone has set an ambitious goal of hitting $1 trillion in overall assets by next year in its private wealth business. And Japan is set to be part of that push. Blackstone's global head of private wealth, Joan Solotar, is visiting the country right now and joins us exclusively today from Tokyo. Joan, really great to have you with us. And we've sort of been talking about this this goal for a number of years. And it's funny, we're sort of creeping up to the deadline now. Tell us about why you're in Japan and what sort of avenues of growth you're seeing.
Yeah, so thank you for having me. Why Japan? Many reasons. First of all, Japan is the second largest private wealth market in the world. You have a government here that is encouraging a shift from savings to investment. Blackstone has a long history in Japan, not just because we've been investing here since 2007, but Nikko actually was one of the earliest investors in our very first private equity fund. So as Steve Schwarzman likes to say, without Japan, there would be no Blackstone. So we see a lot of opportunity because investors here want the same thing as investors anywhere else. They want good returns, growth, and higher income, and that's something that we can provide.
Against a backdrop of increasing global volatility, and a lot of it is coming from America, right? We had a great big take piece looking at the sort of Asia Sell America movement, and a lot of that is also happening across private wealth, across family offices, for example. Is that trend to sort of almost de-dollarize and move into other parts of the world, like key markets in Asia, something that you've seen as well from flows?
Yeah, it's been interesting. We've been happily or pleased, I should say, with the resilience of the private wealth investor everywhere in the world. So we had 1 week where we saw a slowdown, but flows have resumed. I would say just if I looked sequentially week to week, the last few weeks it's improved. Today, even in the U.S., consumer confidence was higher than it's been in 4 months, the biggest increase since 2007. So I think there's a fair amount of resiliency. And also in times of volatility, when investors are nervous about public markets, they tend to gravitate towards private markets, which are more stable and less volatile.
Yeah, there are some challenges around private markets as well, notwithstanding the interest around transparency, access also. You're there in Japan. How do you open up private markets to Mrs. Watanabe?
Yeah, so we actually here are offering all 4 of our asset classes to private wealth. Private equity, private real estate, private credit, and infrastructure. And I would say the interest here, again, is very similar to what we see in other parts of the world. So if you go back to 2022, it became clear that you just cannot count on diversification from having a pure stock and bond portfolio. And there are many reasons that private investments are more stable. It's not that they're not traded daily. It's basically you're buying at net asset value rather than the highs and the lows subject to the emotion of the market. And obviously, we've seen tremendous volatility in public markets. If you just look at the U.S. market, heavy concentration in just 7 names. And just finally, like, private markets are multiples the size of public markets. So, you know, I think many advisors, many investors recognize that if they're not in the private markets, they're actually missing probably the biggest part of the investment space, certainly as it relates to companies and also properties. And I would say we actually share a fair amount of information. So there's a lot of disclosure. Investors understand what they're owning. And so I think it's actually pretty transparent. And the proof is in the pudding, right? Like, we've been managing these funds for a very long time. They are cycle tested. You know, we are the only firm at this point with scale and history across all the major asset classes. And that's, you know, how we've built our private equity business, off the backs of the good performance of our institutional investing teams.
How much wealth in Japan do you feel is untapped at the moment? Are you able to attach a numerical value to that?
So I would say the following: more than 50% of private wealth assets are still sitting in cash or cash-like securities. That is greater than probably almost anywhere in the world. So that's a massive opportunity. It's hard to size exactly what will go into privates, but less than 1% today sits in private investments. So we're talking about the earliest stages of investors, right? You really didn't even have these products available to the market. And the rules are changing here, which will allow for some of these funds to move onshore rather than attract just offshore funds. So I think you're going to see a lot more product coming. I think you're going to see flows continue. We certainly have a lot of demand. I don't anticipate that is going to slow down. If anything, I think it will continue to accelerate. We're super excited. We're building out our team here. And this is a very long-term effort that we have going. We've been here just in our business more than 4 years, but we think about it in terms of staying put and building, you know, quite an enduring business. I'm very optimistic about Japan.
All right, Joan Solotar, Global Head of Private Wealth at Blackstone. Thanks so much for joining us. Well, shares of 7-Eleven operator 7&I have edged higher since shareholders met earlier this week to approve a new board. Investors appear willing to see what happens with the radical overhaul the Japanese company has pledged to counter a $52 billion takeover bid from Canada's Alimentation Couche-Tard. Bloomberg Originals has been taking a closer look at the battle for global convenience store dominance.
Fruit smoothies, sandwiches, onigiris, bento boxes.
Looks pretty good, right? And if you've ever visited Japan, you've probably sampled 7-Eleven's finest. Yes, 7-Eleven, the convenience store, where eager tourists make the pilgrimage to see how many meals they can have there a day.
They basically serve gourmet convenience.
Unlike in the US.
Burgers, slushies,
hot dogs.
While 7-Eleven perfected its model in Japan, it struggled to replicate it overseas. And that's at the center of a new battle that could determine the future of the company.
Circle K operator Couche-Tard making a bid to take over rival and 7-Eleven owner 7&I.
The takeover proposal by Couche-Tard was kind of a shock not only to 7&I itself, but to corporate Japan as a whole.
So why is there a billion-dollar battle for 7-Eleven? And what could it mean for the future of convenience stores?
In 1927, 7-Eleven started as an ice vendor in Dallas, Texas, and gradually became a general merchandiser, selling eggs, bread, and milk.
A retailer known as Ito-Yokado, which had been in operation for close to a century in Japan, discovered 7-Eleven in the US, brought it over to Japan in the 70s.
By 2005, it had acquired full ownership, making it part of the broader holding company 7&I. Fast forward to the present, and 7-Eleven has become the world's largest convenience store chain, with 62 million visitors every single day. That's more than the population of California and New York put together.
They have around 85,000 stores globally. That's more than Starbucks and McDonald's combined.
Currently, the company is doing business in 20 countries, and they have an ambition to increase that to 30 countries by 2030.
And about 1 in every 4 of its stores are in Japan, which is where the company was, in many ways, able to perfect its model.
You can get a lot of social services, municipal services, sending packages, banking. You can get delicious food.
It's fresh, it's high quality, and it's affordable.
And that's down to one key thing.
Part of the entire supply chain system is the Tamping Kandi model. It's even been the subject of a Harvard case study. A lot of it is automated, so as customers buy products, the back-end system understands that one particular store is going to need more of something than another.
Trucks will then pick up these products from one of many distribution centers and deliver them to the corresponding store.
They have more than 150 factories dedicated to making 7-Eleven products in Japan, delivering to their stores every day.
But it's a model that's proved challenging to replicate in the US.
Due to the distance, the country is bigger. You have less stores that are concentrated in certain area.
That means that stores in the US tend to offer more processed foods compared to the fresh products found in Japan. In fact, processed foods make up 47% of all sales in the US. That's almost double the amount than in Japan, where hot and prepackaged fresh food make up a much bigger share.
In the US, competition is tough, either from other convenience stores, from quick service restaurants, or even supermarkets.
And then there's the state of the American economy.
A lot of consumers have stopped going to convenience stores to pick up items because they're really watching their wallets and choosing instead to go to discount stores or to buy in bulk elsewhere.
All of this has translated into a decline of 7-Eleven's sales in the US. And that's a problem because North America makes up about half of the company's profit, which is why it's been under pressure to implement reforms.
In the US, 7-Eleven has been revamping their stores, introducing new products, improving their food quality, as well as improving the supply chain.
It's also tried expanding to other parts of the world, including into Europe. But it's been tough.
The challenge in making it a global empire is that 7-Eleven, as it exists, are almost different entities depending on the country you go to.
And that boils down to the several ways stores can be operated. One is direct ownership, where the parent company 7&I operates a certain store. The second is franchising, where an individual store owner purchases the right to use the 7-Eleven brand and its products. And the last one is licenses, where another company gets the right to operate all the stores in a certain country. That's one reason it's hard for 7-Eleven to offer a consistent experience across regions. And that's where these guys come in.
Quebec company Couche-Tard, the owner of Circle K stores, wants to buy the Japanese company that operates 7-Eleven.
We would like to just further invest in the innovation and then take those learnings and deploy that excellence around the world.
So the ambition here is very clear, to create the world's dominant convenience store empire.
Alimentation Couche-Tard sees a mine of expertise as well as store network at 7&I, so they would want to take advantage of both. They could also bring global retail practices to 7&I, which are more standardized.
The deal, which is still under discussion, would have major implications not only for 7-Eleven, but also for corporate Japan.
If this goes through, it will be the biggest foreign takeover of a Japanese company in history.
Even though 7-Eleven did get its start in the US, it's grown to become a key part of Japanese culture, which is why a foreign takeover could be a hard sell.
There are certain retail experiences that somehow feel different from others. You get this when you walk into a 7-Eleven store in Japan. That's the sense of sort of excitement and discovery. That's really kind of magical, and that's what everyone is after, both its investors as well as Couche-Tard.
And subscribers can see that documentary right now on the terminal and on Bloomberg.com. It will also be up on the Bloomberg Originals YouTube channel later. This is Bloomberg. Take a look at how we're tracking when it comes to US futures. A pretty muted end of the week being set up after we had some really inclinations towards another rally, as we had, of course, the optimism that the trade war scenario was being lessened. But of course, with that decision at the moment, when it comes to just a temporary block on the US International Trade Court decision, we're now back in that state of flux again. You can see that uncertainty when it comes to trading in US futures, Taiwan futures, as well as looking ahead to the open in China. That is it for the Asia trade.